Hello and welcome to the week ahead video with myself, David Madden. Now before we take a look at the major events of next week, let's take a moment to quickly recap the major events of the week just gone. We saw a strong rally in the US dollar this week. The US dollar index hit its highest level in 20 years, hence why we saw a move to the downside in GBPUSD. Yesterday, the currency pair fell to its lowest level in over 2 years. This was brought about by the high US PPI rating, as traders became fearful that the Federal Reserve might become even more hawkish than previously expected. Hence why we saw a strong US dollar, and in turn we saw weakness in GBPUSD. Looking ahead to next week, on Wednesday we have the UK CPI report. CPI in the UK is currently running at 9.1%, its highest level in 40 years. We've had several interest rate hikes from the Bank of England in the last few months. There is speculation we might see further interest rate hikes should inflation continue to rise. Depending on how the CPI number comes in on Wednesday, we could see an increase in volatility on GBPUSD. Looking at the recent price action, we can see the market has been moving lower. While GBPUSD continues to hold below these three simple moving averages, it's likely the medium-term downward trend will continue. A move lower from here could see it retest 1.1488, and a break below that could see a target 1.1408. Looking at the price action in the past 12 to 16 hours, we can see GBPUSD has rebounded from its multi-year low. Looking at the RSI, we can see it's moving higher as well, indicating the price bias is to the upside. If we do see a continuation in the short-term upward move in the currency pair, it might encounter resistance from this simple moving average here, which comes into play at 1.1925, and a break above that could see a target at 1.2054. On Thursday next week, we have the interest rate decision from the European Central Bank. Now, the ECB have dropped several hints that they're looking at hiking rates by 25 basis points or 0.25%, and they've also suggested they might look to do a large interest rate hike in September. So the interest rate decision and also the commentary from the ECB on Thursday could inject volatility into the DE30, the DAX. Yesterday, the DE30 fell to its lowest level in over 1 week. There are concerns that the German economy could be entering recession. There are concerns for the future of Germany's energy sources, as politicians in Europe are bracing themselves for the possibility that Russia might turn off the gas in winter. Additionally, the sell-off in US stock markets following the high US PPI reading impacted stock markets here in Europe. Looking at the price action recently, we can see the DE30 has been moving lower. While the market continues to hold below these two simple moving averages, it's likely the DE30 will continue to move lower. If it moves lower from here, it could look to retest 12,431. Looking at the price action in the last 12 to 16 hours, we can see the market has rebounded somewhat. We can also see a steady decline in negative momentum on the MACD indicator, suggesting that the bears are no longer as influential as they once were. If we do see a continuation in the upward move in the DE30, it might encounter resistance from this simple moving average here, which comes into play at 12,870, and a break above that could see a target 13,021. So just to recap, on Wednesday we have the UK CPI report, and on Thursday we have the ECB meeting.